Equity Mates, from our mates at Spaceship. Investing made easy.
Welcome to another episode of Equity Mates. It is Wednesday, which means only one thing, and that is Watchlist Wednesday. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Love Watchlist Wednesday because we get to speak to some of the best in the business and we get to hear about stocks that they're excited about. And really, what more could you ask for?
Well, that's nothing, really. It's Christmas every Wednesday. As this week was all about our long-form interview with Sunny, Portfolio Manager of Antipodes Asia Growth Fund, we of course have him back in the studio today. Sunny, welcome.
Thank you.
So we will be going through 3 stocks on Sunny's watch list or in the portfolio. So let's kick it off. The first is C Limited, Sunny. So for those of the Equity Mates community who haven't seen C before, what do they do and why are they on the watch list?
Yeah, C is a e-commerce and technology business based out of Singapore, but it's covering the whole Southeast Asian geography. So in a way, you can kind of think of them as a Tencent plus an Alibaba merged together, where they have a big gaming franchise, which is doing quite well in that region, and they've got Tencent as a strong backer of the business, and they've got an e-commerce platform akin to maybe Alibaba's e-commerce platform in that region. And then thirdly, they are focused on building a financial services platform because there's a lot of underbanked opportunity in Vietnam, Indonesia, Philippines, which they are trying to tackle. So as people use their e-commerce platform, they're offering an option to buy now, pay later, or other credit facilities to enhance the users' purchase frequency, but also to create an awareness with the user that there's an alternative banking opportunity from a fintech point of view.
So C is often discussed as one of these potential super apps. And for people who are unfamiliar with the super app term, it's something like Tencent or something like WeChat, where it's this app with a payment system, and then all these other apps are built on top of it. Is that your thesis for C, that it's going to be this all-encompassing Tencent-style super app?
Yeah, and that's kind of a good way to think about it. Many consumers in these regions are actually mobile-first consumers. So their awareness and their willingness to kind of adopt new technologies is incredibly high. And when you combine that with the fact that banking experiences or even shopping experiences are quite terrible, particularly in more of the lower tier cities in these regions, the adoption is very high, and the willingness to use that app for many things is quite high.
And then, so C is based in Singapore, and then you have like a Gojek and Tokopedia, which have just merged or are merging, based in Indonesia. Is there a lot of competition amongst these Southeast Asian nations for sort of that part of Asia?
Yeah, there is. It's a big opportunity. So it's a $1 trillion retail sales market up for grabs. At the moment, C is comfortably ahead in many of these Southeast Asian markets. And for them, it's to cement that ahead and move further. And so I think, we're watching them closely as they continue to build logistics, offer best-in-class e-commerce, offer best-in-class fintech, and make their, lead.
I don't envy whoever has to plan the logistics of at-home delivery in Southeast Asia. Like that would be the toughest region in the world to try and deliver from warehouse to door.
That's right. It's expensive and quite
all over the shop.
Quite unorganized.
Yeah.
So there's a big opportunity for someone to organize it and make that experience seamless. And I think that's so we think e-commerce adoption, which is roughly about 10% in Southeast Asia, it's about 35% in China or 20s in the US. So we think it's early days still for that e-commerce game. And when you think about when you're shopping in some of these places, the shopping experience is not that great. So if you get those two things right, I think it can be quite powerful.
Well, so that was C Limited, and that's listed in the US, right?
Yeah, that's listed on the NASDAQ. Yes.
Yeah.
Is the ticker SEA?
SE-US.
They missed a chance there.
Yeah.
So the second stock on your watch list, Sonny, is Meituan. So for those, again, let's start at the top. What do they do and why do you like them?
Yeah, so Meituan is, you can think of them as your Uber Eats business, and food delivery is core part of what they're trying to do. So it's China's largest food delivery company. They have approximately 70% market share in China, and they're incredibly dominant. So just to put in terms of context, they're delivering about 35 million orders per day, and we think that's still going to go up.
Yeah.
And as they've done very well in food delivery, and they're branching out to more on-demand logistics. So not just getting your food ordered within 30 minutes, 40 minutes. It's also getting other household items, flowers, all these other kind of goods. And it's about creating that localized instant commerce experience, which is what they are focused on. And what's interesting now is that China's e-commerce market is quite unique. It's an enormous country, and most of the users are now in the lower tier cities. And one of the big segments that people are trying to move online is agriculture and packaged goods. And those type of items, you've got to build a supply chain and build a network. And so the whole concept of community group buying has emerged in China, where you actually have community e-commerce. So the three of us can bop on the app and buy the same goods, and it will get delivered to our neighborhood via this community group buying app. And so Meituan is leading the front on that face as well to dominate. And so it's kind of becoming a more e-commerce opportunity in those lower tier cities as well.
Yeah, wow.
So as it moves from food delivery to e-commerce, I assume it's butting up against Pinduoduo and Alibaba, the two big e-commerce players, more and more. Why do you think Meituan is better positioned than those two? Do you think it's going to beat them? Or do you think there's enough to go around? What's the thesis about this inter-China rivalry and fight between these tech e-commerce giants?
Yeah, absolutely. There's obviously a lot of competitive. The market's incredibly competitive and quite innovative. I think the competition creates amazing innovation. The opportunity in the lower tier cities is about $2 trillion US dollars to crack. So it's a big TAM out there, total addressable market, that these companies are vying for. And I agree, yes, I don't think it's going to be one player takes all. There will be certain parts of China that are dominated by Pinduoduo and certain parts of China that are dominated by Meituan. Alibaba is a late mover into this space, so we will watch them closely. At the moment, we see that a bit like in food delivery, once you build order density, frequency, you get to a certain lead, it gets a bit harder for the third or fourth or fifth player to catch up. But I think the market will be dominated by 2 to 3 players, of which we think Meituan and Pinduoduo will be sizable players in that big opportunity.
And just briefly, 70% market share in delivery is pretty phenomenal. What have been some of the keys to success for that? I mean, you look at the states, and then what's DoorDash at?
DoorDash
50%?
is about 55 now,
50, which is pretty
really
phenomenal.
impressive.
Yeah, so to get to 70, I mean, they must be doing something right.
Yeah, it's been just a very strong focus on acquiring merchants, acquiring users at the same token, and it's been a land grab. And the second player, LMR, sits inside Alibaba, and Alibaba's a great business, but it's kind of a sprawling giant where it's got its fingers in many pies, whereas Meituan really just was focused on food delivery. So you had a focused founder that had great access to the market through WeChat. So he grew the Meituan's user base grew largely through WeChat, which Alibaba hasn't had access to in the past. And they've effectively gone off and taken a lot of share. Now, once you get to this logistics advantage, you're doing more orders than your competitor. It becomes incredibly hard for your competitor to catch up. So even if your competitor offers a lot of subsidies, look, the experience is really good for the user. The order frequency is high. The order density is high. It becomes difficult. It becomes difficult to crack.
Unit economics look a lot better with network density.
Correct. That's right.
So speaking of fingers in many pies, to close out, no surprise that Tencent is on your list, a company that seems to be backing almost every other company in the world.
We had a look at one stage. I think it's made over 700 venture investments, including like 5% of Afterpay, a whole bunch of just random companies. Yeah, Reddit.
Super random.
Roblox, one of Bryce's favourite companies.
Yeah, it's everywhere. Again, in your own words, how would you describe Tencent, the giant, and why is it on your watch list?
Yeah, so Tencent for us remains, as you rightly described, like the ultimate platform, where it's got fingers in many pies, but it's also just sitting as an ecosystem where the rest of China e-commerce is feeding off. So Pinduoduo, which has succeeded in e-commerce, has succeeded because of WeChat. Meituan is another example. We think that gives Tencent phenomenal access. It can see the biggest trends and kind of partner with the best of breed companies in those particular verticals, which makes it quite favorable. But the core business of Tencent, which is gaming, advertising, and payments, look, that core business, when you strip out all the investments, it's trading on a very reasonable multiple of about 18, 19 times PE. For a franchise that is capable of growing north of 20 for many, many years. And whilst we said China e-commerce is unique and maybe ahead of the West, China digital advertising is behind. And we think there's an enormous opportunity for digital advertising in China over time. Because the advertising market in China is really taking off now. We think about 50 basis points of GDP is spent on advertising in China, whereas in the US or in other, UK, it's probably north of 1%, 1 to 1.2. So it's an underpenetrated market where Tencent is incredibly dominant, with the most dominant social app. And it won't be a winner-take-all market. We think there's room for ByteDance to take some share and other niche verticals, but we think Tencent's going to by far and truly take its share, and it's on an incredibly cheap multiple with many multiple ways to win.
Too bad it's so hard to buy.
I know. So look, we're both big fans of Tencent. We've spoken about it a few times on the show. One question that always comes to mind when you talk about Tencent is that I would assume every Chinese internet user is already on WeChat or very close. They would have the market there. And it's unlikely that WeChat will succeed outside of China. So the question becomes like, what's the next stage of growth for Tencent? It's got fingers in all these gaming pies. It's got Tencent Music, which is listed over in the US. But what's the future? Like, what's the 3 to 5 year case for Tencent?
Yeah. So look, the core business is still quite under-monetized, and when we say the core business, we're talking about digital advertising, and then next to that is payments. So the advertising market in China is about $80 billion, and we think that's probably going to double to $170 billion. So that in itself, we think Tencent's going to maintain its 25% market share in. So in itself, that is probably potentially a $300 to $400 billion opportunity for Tencent to tackle. As they continue to invest in different verticals, and these investment companies are also growing, as gaming platform in China remains incredibly dominant, and we think still has more monetization opportunity. But also over time, e-commerce, as we talked about with Meituan, is just going into more and more channels. So increasingly, e-commerce is happening in WeChat. And Tencent's not monetizing that. They're monetizing it from a payments point of view at about 30 basis points or 25 basis points. But increasingly, they could monetize from an advertising point of view, like most e-commerce companies do. So we think at the moment about $150 billion is going through WeChat mini programs ecosystem, and that's a shop front. It's like a Nike shop front or a Chinese brand shop front, and the consumer is basically using that to facilitate a transaction. So there are many ways for Tencent to continue to grow, and that comes back to the core point that it's such a dominant social app, which we think will be the case for some time to come.
Crazy company.
What a company. Yeah.
What a company. Well, Sunny, that does bring us to the end of today's episode. Thank you for sharing your 3 stocks. Just to recap, that was C Limited, listed in the US, Meituan and Tencent, both listed in Hong Kong. So check them out, put them on your watch list if you haven't already. I'd be surprised if Tencent is missing. But that, unfortunately, is the end of today's episode. And tomorrow, Ren, we'll be doing a deep dive on a couple of other stocks.
Yeah, if you want more individual stock chat, don't change the channel, don't go anywhere, because Sunny will be back tomorrow joining us to talk about two companies in the semiconductor industry, Taiwan Semiconductors and Samsung. So join us same time, same place tomorrow to hear Sunny break those two companies down.
Equity Mates, from our mates at Spaceship. Investing made easy.